Welcome back to Midcap Radar. Well, like we promised, Arvind Nanda, who's the Managing Director at Interarch Building Solutions, joins us now to discuss the Q4 results and the way forward. Thank you so much, Mr. Nanda, for joining us. First up, when you're looking at Q4 FY25, significant improvement seen, especially as far as the operating margins are concerned. FY25 top-line growth at a little over 12%. You had earlier told us that you're expecting to end the year with a 10% top-line growth. So you managed to beat that. FY26, what is the top-line growth that you are targeting, especially with the enhanced capacity, and can operating margins expand?
Thank you for having me on the show. Yes, I think Interarch managed to perform beyond expectations. For the next year, I think if you look at our order book, the order book is showing more or less 1,700 crore, 1,640 crores of orders already booked in this year, including a very large order, which is the largest single order in pre-unit buildings, which we booked a month ago. So I think our expectation is that we should grow by at least 17.5% to 18% on the top line growth in the coming year. Steel pricing remaining similar. The turnover does get affected a little bit by the steel prices. And I think we are aiming that our profit before tax should be in the region of, currently it was about 10, I think 9, our EBITDA is actually lower than our PBT because we have actually no interest and very low depreciation. Interest is a positive for us. So we are expecting that our EBITDA should go up to about 9.7, 9.8, and consequently the profit before tax to cross 10%. Things get better, yeah. I think our operational leverage will help us this year. I think we should improve our percentages all around in the coming year.
Sure, and I'd just like to ask you, so 17.5 to 18%, very good growth, much higher as compared to the 12% or so that you've posted this time around. So bodes well for the company. But apart from the confirmed order book that you have on on your books, what does the bid pipeline look like, and how much of this would be converted into order inflows in FY26?
The pipeline is looking very good. In fact, I think in spite of our trying to add capacity much faster than what we've been doing in the past 12 months, our new plans are also there. We have recently bought more land besides the Gujarat land which we had in Andhra Pradesh, right next to our present Andhra Pradesh facility. We feel that we can probably put the plant there faster. So speed has become of great essence. Tying up with other companies like JSPL, we tied up. We have tied up with one or two smaller companies also to help us in giving us more production and engineering capacities like with Moltech. So I think going forward, the pipeline is excellent, but I think we will be a little constrained because of our capacity, considering that we already have 1,640 crores of orders in hand. So literally we have 12 months of expected orders. So we are going to try and boost up the capacity as fast as possible in the next few months. Pipeline or orders is not an issue currently. We don't see any problem, except the problem of too much. I think it's a problem of plenty right now, rather than... So we are adding capacity, and I think pipeline on both ends, we have two different pipelines. One is a more serious pipeline where we have already engineered the building and bid for it, and negotiations going on. That is currently about 2,500 crores. And the ones which we are bidding, but on a very broad category, still 6 months to 1.5 years away, is about 3,500 crores. I think together 5,000 to 6,000 crores of pipeline is a very, very good pipeline in the market. It's more up to us. I think we need to build up our capacity faster and faster.
Mr. Nanda, I get that completely, and you mentioned this last time as well, that it's more of a constraint of capacity rather than one of demand. Well, a couple of numbers. At the end of the March quarter, we understand that the total order book was around 1,646 crore. You mentioned that you had booked one large order in April of this year, which was the largest ever order you booked of close to 1540 crore. Is this from a tire company that you had mentioned last time around? Is it the same order that you're referring to? And also, can you give us a sense, as once capacity does expand, what kind of top line growth can you achieve as far as FY27 is concerned?
See, our order book we have been taking, because when we started our first quarterly results, so we've been taking not the same quarter, but let's say 1st February we gave an order book. So this one is actually 1st of May, 30th April. These 3 months, so 30th April our order book is 1646 crores as you are showing. And I think if we can, it is for a very large company. We are not under confidentiality. I cannot disclose the name or the field, but yes, I think it will come out more or less soon. We have worked in that field for many, many years for many other companies also. We got the advantage of doing the whole project, which is why the size is larger. That Interarch was trusted with the full order of by this company. And I think if we add capacity, we can grow faster. But today, I would not like to commit. I think 6 months down the line, once the more capacities are in place, I would be in a better position to say what kind of growth we can expect in 25-26. And we are planning, as we had said earlier, that 27-28, we should have a turnover of about 24 to 2,500 crores, which we are sticking by. We are hoping that it might improve even further. Things have been going, but that is definitely what we are sticking to, 24 to 2,500 crores by 27-28, FY 27-28.
Sure, Mr. Nanda, and you've alluded that you want to increase your capacity. I believe that you've also already ramped up production in Andhra Pradesh. You're looking to increase capacity in Gujarat. You're coming up with a 5th facility as well. So what is the kind of capex investments that you will be making, and how would you fund it?
See, each plant of ours, approximately capex is between 70 to 80 crores. Land is already bought. Andhra Pradesh and the other plants are over. So it's all from internal sources. We raised some money in the IPO for the Andhra plant and for the North India plant. That is a part of the IPO. We already have a lot of our own internal resources, internal profitability, which we have got. We have, for the first time in many decades, we are distributing a dividend this year also. So we have a 12.5 rupees per share dividend also, because we are making good margins and good cash acquisition. So it is all going to be from our own resources. Till next 3 plants, we have sufficient money currently to set up 3 new plants without any problem. And I'm sure by the time they end up, we would have more internal resources to set up. So we are not looking for any capital raise, any debt. We have been a debt-free company, as many people are aware, for many decades.
Right.
We intend to remain that.
Okay, thank you so much, Mr. Nanda. I know the street clearly likes what you've been saying. Stock high by almost 10% in today's trading session, ending FY25 on a very strong note. We'll now slip into a short break, but as we do that, here is some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.